I hate to say this, but 95% of all predictions made by Michael Burry have come true. The 2000 dot-com crisis, the 2008-09 financial crisis, the hyperinflation warning of 2021, and the crypto and stock market crash prediction when the markets were at their top and everyone expected a further 20% climb. Now, crypto's down 80% and the stock market approximately 30%. Now, I don't want this new prediction to come true because a lot of people will suffer bankruptcy if this happens. One should pay attention to the warnings of Michael Burry. Anyone who's followed his advice has saved their portfolio from destruction. All asset classes are down 30 to 80%. Now let's get to the main topic of this video. According to Michael Burry, a crypto exchange 9 times larger than FTX could go bankrupt in early 2023. The exchange processed trades worth around $1.9 trillion in November, about half of the entire crypto market's trading volume. That sum dwarfed its former challenger FTX, which handled $230 billion before filing for bankruptcy, according to the data site Crypto Compare. This exchange accounts for 50% of the world's total crypto trading volume on its platforms. According to Reuters, the United States Department of Justice has gathered credible evidence to charge that crypto exchange and its executives with money laundering and sanctions violations. And it's none other than Binance.com. Now, you'd be surprised to know that no one on this earth except the Binance CEO knows where this company is registered. And because no one knows where Binance.com is registered, no one in the US or the EU can regulate Binance.com. Now, even in the FTX case, we knew it was registered in the Bahamas, but no one knows where Binance is registered. Binance is essentially unregulated in the same way that FTX was unregulated. Binance does not say where its headquarters are based. Founded in China, Binance left the country in 2017 before the country banned cryptocurrency trading. According to Reuters, quote, Binance declines to say where Binance.com is based. It doesn't disclose basic financial information such as revenue, profit, and cash reserves. Michael Burry said in his latest tweet that examinations of digital asset holdings in firms like Binance and FTX are essentially meaningless because auditors are learning on the job, much like they were in 2005 with credit default swaps. Burry is relating the current crypto industry situation with the 2008-09 financial crisis, where complex instruments are not clearly understood by the auditors. And this inability of government and audit firms led to the financial crisis of 2008.
Down 1.7% here, a loss of 37 points or so. Apple shares are just getting hammered this morning.
Let's talk about the speed with which we are watching this market deteriorate by full 5%. We're down over 16%. Dow at the same time has fallen about 18%.
And the same is the current situation with Binance-type companies. Michael Burry has been publicly critical of cryptocurrencies, describing them as, quote, the mother of all scams. He stated that he believes bitcoins and most other cryptocurrencies are highly overvalued. Michael Burry warned crypto investors even before the FTX collapse. Here's one of his tweets before the FTX bankruptcy. He wrote on Twitter before the posts were deleted, quote, all hype speculation is doing is drawing in retail before the mother of all crashes. When crypto falls from trillions, or meme stocks fall from tens of billions, hashtag Main Street losses will approach the size of countries. History ain't changed. Foreseeing the upcoming stock market and crypto crash, Burry's Cyan Capital Management dumped its entire stock portfolio in the second quarter in anticipation of a collapse. The firm sold off its long positions on 11 stocks, including Google parent Alphabet, Facebook parent Meta, Bristol-Myers Squibb, and Nexstar Media Group, while taking a stake in Florida-based private prison operator Geo Group. Burry regularly warns investors of an impending market catastrophe. In June of 2021, he cautioned that the irrational fear of missing out trading activity around cryptocurrencies and meme stocks were likely to end in disaster for overextended retail traders. Now, all of his crypto-related predictions are coming true. Back then, everyone was calling Burry predictions as FUD, F-U-D. Burry was called a doomsayer, a neophyte Cassandra who knew nothing about the blockchain or the cresting digital wave. Unfortunately, those who claimed that cryptocurrency prices would only continue to climb are now crushed under the weight of their own hubris. Burry posted on Twitter on November 8th, quote, "The very acronym FUD served to minimize the folly in which so many engage. No matter how logical an argument, if contrary to the bullish narrative, it deserved scorn as FUD. Well, well, well. Investors who have yet to lose investments might do well to heed Burry's advice and get out of the way, while big tech adjusts to a dwindling post-pandemic demand and the SEC and federal legislators sort out how to regulate crypto markets." Burry cautioned investors that the crypto market was experiencing the, quote, "greatest speculative bubble of all time in all things," and that the mother of all crashes was on the horizon for cryptocurrency investors. Crypto is designed to be an alternative to big banks, a translucent financial instrument that operates outside of the mainstream, allowing individuals, organizations, and governments access to capital funding that's not overseen by fat cat bankers. Now, turns out there's just as much greed and corruption in unregulated markets as there is in those that are supposed to be overseen by the United States Securities and Exchange Commission. Former chief of the U.S. Securities and Exchange Commission's Office of Internet Enforcement, Reed Stark, said that Binance's operations were more opaque even than those of FTX, saying, quote, "There's absolutely no transparency, no sunlight, no confirmation of any kind about its financial position." According to Reuters, reporting showed that Binance kept weak anti-money laundering controls, processed over $10 billion in payments for criminals and companies seeking to evade U.S. sanctions, and plotted to evade regulators in the United States and elsewhere. According to the latest social media posts and news items, Binance has been at the center of speculation that the platform would not have enough reserves to survive a run on the bank, and could explode in less than a week's time, just like FTX filed for bankruptcy after a 5-day bank run by customers. Binance is facing withdrawals of approximately $1 billion a day. The problem is that it's tough to really assess the financial health of Binance because the full accounting of the firm's assets and liabilities is not available. Binance paused withdrawals linked to cryptocurrency USDC on December 13th in order to facilitate a so-called token swap of USDC stablecoins for its own BUSD stablecoins. The company explained it as a measure to loosen up liquidity in anticipation of additional withdrawals. But for many crypto fans on social media, this was bad, as FTX did the same thing just before filing for bankruptcy. Net outflows of digital tokens from Binance amounted to about $3.7 billion in the first week of December, and $6 billion in the second week, and yet more withdrawals are anticipated in the coming days. After the FTX crash, Changpeng Zhao is keen to demonstrate that Binance, unlike many other crypto exchanges, has the necessary reserves to cover clients' assets and liabilities. A month after the collapse of the FTX cryptocurrency exchange, and a month-long period of consolidation in the range of $15,500 to $17,200 per Bitcoin, the most popular cryptocurrency was trying to break out of the bearish trend and was trading above $18,000 for a short time. Despite the appearance of the first signs of optimism in the market, the situation began to worsen again, primarily due to news of a potential criminal case against the world's largest crypto exchange, Binance, and doubts about the quality of the audit report on its reserves. As a result, on December 13th, Binance customers withdrew funds in the amount of about $1.9 billion, which is one of the largest values in recent years. In the first half of December, the rate of withdrawal of coins reached a record level of 201,650 bitcoins per month, which has not happened since the emergence of cryptocurrencies as investment assets. Across 2022, both the equities market and cryptocurrencies have suffered a massive correction amidst prevailing macroeconomic factors led by inflation and interest rate hikes. Based on the market's performance from the second half, Burry hinted that the first half of 2023 will be even worse. It is worth mentioning that after showing signs of rallying towards 18,000, Bitcoin has failed to maintain the gains. The short-term rally emerged after U.S. inflation slowed, with the Federal Reserve cooling down on interest rate hikes.